As you know, the stock market this year has been a roller coaster, so I wanted to hone in on a couple strong buys in my portfolio to start your research off for you. Here's the deal, I'm going to give you those 3 stock names right now, but like I've said in multiple other videos, I hope you're not someone that's just sitting there waiting for the names of these stocks and then you go out and buy them, or you just take that information and say, okay, cool, those sound like good stocks, but you're not actually understanding what is it that makes them good? Why am I even saying that I like them so much, and why am I buying them so much? This video is going to give you the specific metrics and reasoning for each one of these stocks. Watch the tools that I use and the why behind my reasoning for picking these stocks so that you can do the same to find great stocks for your portfolio. Remember, it's so much more valuable for me to not just give you the fish, but for me to teach you how to fish so you'll never go hungry. The fish that I'm going to talk about in this video are SoFi, Google, and Berkshire Hathaway. When you see my reasoning and the crazy research that I did for this video, you'll see exactly why I'm investing so heavily into those. I also have a new ETF that I've been buying up and adding to my 3-fund portfolio, and I'll wait till the end to show you that one because I don't want you to get confused, but all of this entire video is going to be very, very important, especially with the growth that's about to happen in the next 5 years. My name is Nolan Gouveia, my students call me Professor G, and I made this channel to make investing simplified. Now before I get started, what are some stocks that you're buying up like crazy? Let's go ahead and comment down below and put a reasoning why so that other people can learn and maybe look at some of those stocks for themselves. So anyway, the first stock on this list is SoFi. And SoFi is a stock that I've been buying heavy since last year and truly believe that it's going to be up over $100 within 5 years, probably much sooner than that. The company's strategy is one of the smartest that I've seen. It's a little bit longer term of a strategy, but this company is incredibly innovative and they're doing things that other banks or their competitors are just not doing. Its whole strategy is in hooking the younger generation and providing them with features that they've been demanding from other banks for quite some time. The company's made many smart moves over the years, leaning into its target market of students and young professionals and offering products that suit them. It also has a strong focus on the user experience, and its app is easy to use. This makes what could be a daunting foray into financial management more pleasant for young individuals who are just getting their feet wet in the system. SoFi's stock has skyrocketed an eye-popping 265% over the past year, with current revenue growth clocking in at a robust 27.8% and membership soaring to 11.7 million. At investing.com, I use the Investing Pro tab and the Warren AI tool to simplify it for myself and all of you. The growth is the most important thing for us as investors. SoFi is hitting records on nearly every front: revenue, users, and even fee-based income. Q2 2025 saw revenue leap 33% year over year, adjusted EBITDA jump 46%, and net income margin reached 9%. The company's tech engine is firing with a $6 billion run rate in its loan platform business and new AI-powered products rolling out fast. Analyst projections back it up. 2025 revenue is forecast to jump another 29.8%. This banking is for the future. SoFi knows its customers. It knows its place in the banking landscape. Its edge is in its ability to provide something different from the traditional banking platform that offers meaningful value for its user base. It got accolades from the market when it announced it's bringing back cryptocurrency trading to its platform, and it's followed up on that by announcing instant international money transfer through a blockchain network. It's partnering with Lightspark to convert funds to Bitcoin, which then gets converted to local currency. The market has been enthusiastic about SoFi as it keeps innovating with new services. While it already has a sizable portion of its target market, it has solid opportunities to monetize this base with its expanded services. It's also a market that's growing in its financial journey, and its customers' lifetime value is likely to increase enormously. SoFi is currently right under $26 per share. Like I said before, SoFi is one that right now may seem a little overpriced since the PE is over 52 and it has skyrocketed already 82% for the year to date, but I feel like this is just the beginning, and 5 years from now, I'll be very happy that I've been buying heavy in my portfolio. Next is Google, and I can't say enough good about this company, and I have some pretty crazy stats to back it up. But first, let me touch on what I showed earlier about my analysis on SoFi. My favorite tool is called ProPicks Plus, and it's found at investing.com. Thank you to investing.com for being the sponsor of today's video. Investing.com is the go-to financial website that many of us use daily. When you subscribe as a member, you get access to ProPicks, and more specifically ProPicks Plus, which is what I use personally. This uses artificial intelligence to analyze the market and gives you a list of the top investment opportunities. What I love about ProPicks Plus is that it saves me a ton of time. Instead of spending hours researching stocks, I can now check their picks and make informed decisions in minutes. As an Investing Pro member, you don't only get access to ProPicks, but a whole suite of other powerful tools. For example, there's an ideas section where you can go look into and copy the strategies of legendary investors like Warren Buffett. Like I said before, I use the Pro Plus on investing.com, which gives me 65 plus predefined stock screens, 1,200 plus premium metrics for stocks. The Pro Plus is for investors who want hedge fund grade data and research capabilities to find strategic opportunities. The best part? Investing.com is running a sale, but I managed to get an even better discount for you all. This means you get the lowest price of the year on an Investing Pro subscription. Click the link in the description to subscribe and start using ProPicks today, and this offer is only available for a limited time, so don't miss out. Next on this list is Google, and I made a video on specifically Google and why things are going crazy right now and what you need to know. So let me show you a short clip on that from a couple of weeks ago just in case you missed it, and then I'll go even deeper. I've been glad that I've been buying the dip on Google or Alphabet, and I've been telling you that it's been undervalued all year. On September 3rd and 4th, a US federal judge issued a landmark ruling in Google's antitrust case. The judge affirmed that Google held monopoly power in search, but he opted not to enforce drastic remedies like forcing a breakup or requiring the sale of Chrome or Android. Instead, the judge imposed lighter measures, such as banning certain exclusive agreements and mandating limited data sharing, recognizing the disruptive role of generative AI in reshaping competition. This outcome was seen as a major win for Google. The company avoided the most extreme enforcement options, fueling investor relief and confidence. Following the ruling, Alphabet stock soared. Price spiked by roughly 9%, pushing shares to all-time highs, around 230 to 232, translating into a staggering $200 to $230 billion increase in market capitalization. Also following the ruling, several analysts upgrade their outlooks on Alphabet, lifting price targets significantly. For example, Pivotal Research raised its target to $300. Oppenheimer maintained an outperform, and JP Morgan raised its target to $260, all signaling continued bullish sentiment. I've been buying since the $150 range last year and very heavily in the $160 and $170 range all year this year, so I'm very happy right now. I do believe that this stock will just continue to run. Now, obviously investing right now at its all-time high might be a little bit risky, but I do think that long term, I agree. I think that I see it over $300 for sure in the next couple of years. So not only all of that, but also let me show you this research that I just currently did. Because a lot of people are definitely wondering, well, yeah, it went up and now it's at its like all-time high, should I keep buying? So here on investing.com, I love the Pro Research tool specifically for individual stocks. This gives me everything I need to know, and then I go check to cross-reference it later to make sure it's correct, and it's usually spot on. The momentum and technical indicators all show heavy or strong buy at this point. There's also so many bull cases moving forward now that the lawsuit ramifications were not anywhere near as strong as many feared it would be. Google Cloud Platform has experienced robust growth at 32% year over year, with a 38% increase in cloud backlog suggesting strong future momentum in this high-margin business segment. Significant investments in AI are enhancing product offerings across search, cloud, and YouTube, positioning Alphabet well for the next generation of internet services. Even though Google shot straight up after the news and is up over 23% year to date, it still only has a PE of about 25, which is quite low for a Mag 7 growth company of this size. Now the third stock that I'm buying relentlessly is Berkshire Hathaway. This stock needs very little introduction as one of the most famous investors, Warren Buffett, leads the charge, and this stock has consistently beat the S&P 500 for years, so many are familiar. The issue right now is that Buffett announced he's stepping down at the end of 2025, so the stock has been in a little bit of a slump. It's also in a bit of a slump because investors are just a little bit frustrated that that huge cash pile that they have on hand of over $350 billion is not being used efficiently. It's not being allocated to buy other companies and to use that investment well. It's just kind of sitting in cash. Berkshire is a behemoth of a company at over $1 trillion in valuation. It regularly beats the S&P 500 and right now is trading at only a 16.9 PE, so it's in better value territory for investors. If we look at the 5-year chart, obviously Berkshire has been a great one to own, and more recently this year you can see that it had its ups and downs, but still up almost 10%. It's been on sale recently though. Again, people are a little bit worried because Buffett's leaving at the end of the year, but he's been setting up his successors to absolutely be very successful. Greg Abel will become CEO. He runs Berkshire Hathaway Energy and oversees most non-insurance businesses. Buffett has praised his operational expertise and capital allocation discipline. Ajit Jain runs Berkshire's insurance operations, a cornerstone of its financial strength. Both have been in leadership roles for decades, so the transition is unlikely to disrupt Berkshire's operations. Berkshire's insurance companies generate billions in float. This float gives Berkshire low-cost, long-term capital, a unique advantage compared to other conglomerates. That structure remains intact regardless of leadership. I'm not worried about Berkshire Hathaway and actually just happy to be buying in on this moderate dip or at least slump. So I'm going to keep doing so. All right, so those are the 3 stocks that I've been buying incredibly heavy lately, but I also have one ETF that I recently shared with you, and this ETF has consistently beaten the S&P 500, and more importantly, it has better drawdowns. That means that when the S&P 500 goes up, this ETF goes up higher, but when the S&P 500 drops, this ETF drops less. So it's truly a unicorn. And recently I've been adding it with my coveted 3-fund portfolio. This ETF is called SPMO and it's the Invesco S&P 500 Momentum ETF. And I go over it in detail right here in this video. Spare me about 10 minutes and that video will definitely change your finances. Or watch this one to keep you going strong in investing. Remember to keep investing simplified.